General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Friday, Anchor Point. Got too many windows. Anchor Point ended up being Monday. What a Friday. No retest of it, but it is confirmed it was Monday. Smash is playing now. Terminus was hit today. Well, I was waiting for the turnaround. Let's look at the 15-minute. Boom. I was looking like, is NVIDIA running? It was. It was official. It just was choppy the rest of the day. I was gonna say. One side a day to finish off a one-sided week. Long-term investors really showed out. I thought they was going to take profits at all-time high. They said, nope. We not done. So this was week 1. This is week 2. This week is still like the original consolidation week. No coming back for none of these gaps. Just running. Friday. Closed out the week. The Bears face. You know, that definitely wasn't in your face close. Let's go here. Just look at the last 3 weeks. It's week 4, week 1, week 2. Crazy. All right, daily chart. Then we got a whole new swing from here to here. But we don't got a 3-bar high. We don't got no. We got to start buying wigs. Per trading all-time high lecture. So I ain't got nothing to say about that. It speaks for itself. Oh, okay, it does have a little wick. I was gonna say those days where they close with like the flat top. William O'Neal, he talks about fading those. Those like exhaustion moves. But these tops aren't flat. Let's go SPX. Okay, SPX is very tacky, not strong. Actually makes me happy about being bearish. It's not a prettier trade on SPX. So I ain't really missing it. Look at it over here too. It's just choppy. Okay. Just made all-time high. It's not very strong. Yeah. It's not convincing here. The lack, just like the markets are decoupled. It's not smooth. I can't join the bulls. You look like some bull to me. Things are. We need to see strength. I mean, things might not get back in balance. It's tech. That's it. Well, it's tech and healthcare. Can't forget that. But financial suck. It look like it'll give me some chances because Nasdaq be like, oh, we ain't doing no pullbacks. At least this got pullbacks. All right, so let's go. We stayed in 50% of this. We got a flat bottom too. It's been a minute since we had one of these. We came and got it last time. Good for the puts. This is lagging terrible. I heard that was worse. Tell person. Let's look at the SPY. It's the 30 minutes. Hold on. Let's lock this because that's important. That's 50% of that range. We gapped up and stayed above it. Gap and go. Gap and go. Gap and go. Strong Friday. I think the question is gonna be like, when is Nvidia? Because it seemed like they finna get ready. Like y'all had some good earnings. Run up. Let's see. May 20. Okay, that's after the Fed chair. Alright. Still can pull back. But number one stock in both indices. It just took all-time high with a strong candle and stayed inside of it. It's trying. It hasn't had a retracement yet. Let's run up and see. Week and a half. Five. They reported 7 days. 7 business days. Well, 8. Then I traded today. Two losses. Trying to catch the TGIF. Two losses. TGIF. Play. This was just a week. No retracement. I follow the plan. Yes. If not, what caused it, that's not applicable. What will I do differently next time? I'm gonna wait for the 10-minute. Turn around. Did I do well? Control risk. No styles did the framework play out? No, I wasn't looking for that up. Do you learn about pattern narrative? These gap and go days. Don't run. Sell side liquidity. They just chop and go. Watch for tomorrow. Review the week. Watch the tape. Today is the 8th. Boom. All right, just that on that. Work done. Peace.